Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know in the chat box. As always, keep in mind that every trade you take has risk involved. There's no guarantee of profits on any one trade. While there is risk with each and every trade, obviously there's also the potential for profit with each and every trade as well, which is why we're all here to try and find hopefully the best way to go about trying to go after those profits. Keep in mind that what we cover is meant to be educational in nature and not to be taken as financial advisement. Real quick, what is technical analysis? It's basically looking at the historical movements on the charts, usually candlestick charts, which we'll do soon on the live charts, and looking for different patterns that are maybe predictable, repetitive movements, trending movements, something that gives us hopefully an inkling of what will happen in the future based on what happened in the past. And that's the idea of technical analysis. Obviously, what happened in the past is no guarantee of what will happen in the future in terms of trying to predict, but it certainly is helpful to a lot of traders as we use different strategies that we'll cover in today's session as well. So we tend to stick to manual methods of technical analysis in the webinars. What I mean by that is we draw our own price levels, find our own trends, our own lines, entry points, exit points, rather than relying on an indicator to tell us, hey, buy now or sell now with the different types of indicators that give you different types of signals. I like to believe that you and I are much smarter than an indicator, because an indicator is programmed to look back at a certain period of time on the candles and based on the programming of the indicator, tell you whether the movements are overbought or oversold, whether the movement should reverse and go up or reverse and go down. It's purely technical based, and I know this is a technical analysis webinar, but I think we all understand in the real world that there are fundamental news stories that play a role as to how and why the technical patterns are created. And so an indicator really can't take into account the fundamental news situation. It can't tell you, hey, you should preferentially follow my buy signals and not my sell signals. If a market's running down all day long, the indicators are going to tell you at some point, hey, buy. And they might repetitively tell you to buy because the market's dropped enough. And the market might just keep dropping depending on how bad is the fundamental news or how good is the fundamental news. So indicators are only as smart as they're programmed, and when you're using manual methods of technical analysis, at least to support the indicators that you might also be using, then maybe you can be a bit smarter to know that maybe you prefer to trade in one direction more than the other when you combine the fundamental news along with it. Now, if you have any questions, you want to give any input as we go along, please do so in the chat box. I'm happy to address any questions or share any information that might be pertinent. This is our web trader platform. We'll take a look at it again in a moment. And you find that login here from our main website to get into the web trader, which works on mobile and PC/Mac. Now, if we look at the main headlines real quick to get a feel for, well, what is the fundamental news situation before we do our technical analysis, we can see dollar remains near one-year high. Doesn't mean it'll stay there, but the US dollar they're talking about has strengthened quite a bit with some of the fear that's hit the market, and also some talk about cutting back on the bond buying program in the US. Some of the stimulus measures, if they're going to be reined in and cut back, to cut down on some of the inflation of the US dollar, well, then that obviously would strengthen the US dollar. And so some of that talk about tapering the bond buying program is the phrase they've been using, has led to a strengthening of the U.S. dollar. And now, and also in the U.S., they're debating the debt ceiling in the U.S., meaning they're trying to pass through Congress in the U.S. the ability to spend more money that they don't have, to raise, well, how much debt can we run up as a government? And it's almost a comical thing that's done every so often in the U.S. government, is to just keep kicking the can down the road and saying, yeah, okay, we'll raise the debt ceiling again. Let's spend some more money that we don't have, which then what will that do to the strength of the U.S. dollar? If they raise the debt ceiling more and more and more, keep it weak, right? Weaken the U.S. dollar. So these are two opposing things in the same headline. Dollar remains strong, but also talking about raising the debt ceiling again, right? And they're also debating an overall budget of some of the numbers the Democrats in the U.S. have been proposing are $3.5 trillion budget. They want to pass with all kinds of spending and goodies in there for handing out money to different special interests. And even some of them are not happy with that amount. You've got someone like Bernie Sanders talking about wanting $6 trillion in the budget, which is ridiculous when you think about not having enough money even for the current debt ceiling right now. So this debate is going on in the U.S. and there's also a talk of a $1 trillion stimulus package still, to add another stimulus package in for infrastructure spending. So as these things are debated and eventually passed, you have to think about the longer term prognosis or the longer term prediction of what do you think is going to happen to the strength of the USD? Is it going to hold near 1 year highs, or will it weaken again with inflation fears if 3.5 trillion or something is passed as a budget and another trillion added on to that for infrastructure spending, etc. So keep all of that in mind when you start to say, okay, US dollar is strong. Well, today it's not. It's flat. We look here, dollar index, rather flat. So could be a good day to look for a bounce back of other currencies potentially against the USD when we look at the fundamental news situation. Okay, so European stocks higher, UK GDP and French consumer spending impress. Okay, so economies are doing well in different places around the world. The US had really good housing numbers yesterday for existing home sales. There were other good numbers that came out, and now we're looking at European stocks being higher, and UK GDP numbers and French consumer spending impressive. Okay, so the vaccine's been working well. Hospitalization rates are down, even though the spread of the Delta variant maybe is higher than in some places than we would like. Hospitalizations are down. There's some talk even now, one of the vaccines was approved for ages 5 and up. I don't know that those age groups need a vaccine. They don't tend to get so sick, the kids from COVID, but we see more and more improvements and approvals for vaccine use and data showing that the vaccine is doing well. So there's a lot of positivity still out there on the markets, even if there's some fear about some other headlines, which we'll look at in a second. There's some positivity out there that inflation will get under control. Some of the stimulus measures could be pulled back, which has some initial fear on the markets, but in general, the economies are looking strong with these headlines. This is the negative headline I was alluding to. China's having some trouble with Evergrande. It's a big investment group that's involved with real estate and such in China, and they're missing payments. It's not good. There are investors that are feeling it and not happy, and there's some fear that this could spread some problems through China's economy. And so China being the second largest economy in the world, that's not creating positivity on the markets, this particular story. And then we look and we say China also is having a power crunch, and their factories are not having great output right now. So it says prolonged energy crunch or turning to diesel generators or simply shutting shop. Coal industry officials voice fears about stockpiles ahead of winter, and manufacturing shrank in the world's #2 economy. Okay, so that combined with the Evergrande issue in China is creating some fear about the Chinese economy right now. So that's something to keep in mind. A bit of mixed news on the markets right now, but certainly not heavily fear-oriented. If we look at the volatility index, it's actually down. You see the VIX volatility index, that's also referred to as the fear index. It's actually down over 4% right now. So volatility is down. The futures are green. The US dollar is not strengthening today like it did yesterday. So overall, if I'm on the fence, it's not a real strong direction, but I feel like I'm falling towards the side of positive sentiment today based on this quick synopsis of the headlines. Okay. Samuel, yes, this is live. I don't know if you thought I was just a recording, but this is live. It's being recorded, and you can watch it shortly after it ends, within a few hours. I think it's uploaded to our YouTube channel. Certainly by tomorrow morning, it should be. So we see sentiment more positive than negative now. Volatility index down. Futures are green. US dollar is weakening, which is a sign of low fear, and other currencies maybe being able to gain against the US dollar. Because of the China issue, we might look for maybe the Australian dollar to not be so bullish, because the Australian economy is largely based on exports to China as their number one buyer, one of their top buyers of their exports. So what we're looking at is if Australia exports a lot of coal and iron ore to China, if their factories are slowing down and their energy usage is slowing down, that could weigh on the Australian dollar. So it's something to keep in mind. If you expect a strengthening pound or a strengthening euro from the headlines we just looked at, which you might expect that, the numbers are good out of those areas today, maybe a good pairing would be against an Australian dollar that you might expect to be somewhat weak right now with the China issues, okay? Quick fundamental synopsis. Now we'll do the technical analysis as we get on the live charts. Now keep in mind, your risk management as you're trading is important, okay? So real quick, how can AvaTrade help you with your risk management? If you go to our AvaTrade Go app or our web trader platform, the AvaTrade Go app is here. If you download it onto your mobile device from either of the major app stores, you'll see AvaProtect is a feature that's available on many of the instruments, gold, silver, FX pairings, that you can protect against any and all losses for defined time periods. And then also in the order window, which is what we're looking at here, the order window. So before you place your trade, you can protect it with protection for defined time periods for a small premium cost. You also, when you program your take profit and stop loss, it acts as a trade calculator. So you know exactly what's my potential profit with the trade size I have set up and the take profit price I've entered. What am I risking to the stop loss with the current trade size that I'm proposing and the price I enter in? It calculates it for you in your account currency. So very nice app. It trades on the MT4 and MT5 accounts. I would suggest checking that out. And if you log in from our main website here, you'll also be in what's called our web trader platform, which also trades on your MT4 and MT5 accounts. You can switch between them very simply within the platform from here. You go to your accounts section and switch to demo, live account, MT4, MT5, and you can use this platform to trade on any of your accounts. Now, those features I was just showing you, if we go to something like silver or gold, and you see a very nice search feature, actually nicer than the MT4 platform in many ways, more convenient. And then you see these extra risk management features in something like silver, okay? AvaProtect, you can protect by the hour or by the day for a small premium cost, right? And if you want to calculate, well, what would I make to a certain price? Just enter your price, there's your potential profit. How much am I risking? Enter your stop loss price, there's your potential loss to that price. And you can adjust your trade size and it immediately adjusts your potential profit and loss and the premium cost for AvaProtect if you choose to use it, okay? Very nice features. You don't find it anywhere except on our web trader and AvaTrade Go, okay, our app. Now, since we're talking about technical analysis, we also have premium features in Trading Central. If you look at Forex featured ideas or analyst views, you'll see technical analysis signals done for you. Okay, we've got different categories of signals. The chart price levels, the movements expected are broken down for you. Which indicator was used is discussed. In this case, they're talking about the RSI. Very nice signals that come out, time-stamped, so you know how long has that signal been there, and it also shows you the price levels that it's still relevant. So even an older signal can be relevant if it hasn't entered the price zones that are outlined. So very nice technical analysis done for you, and you can look at Forex, you can look at cryptocurrencies, etc. Okay, so very nice premium features that go right along with your technical analysis. Now, if we jump on the MT4 platform, you can see this is where I've done a lot of my own line drawing and technical analysis from the last webinar. And so let me just delete some of these lines. You go to your objects list. It's an easy way to do it. And just highlight the first one and delete, 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 and get rid of all the lines you drew and objects you've added. So what do I have up here? Gold. So let's look at gold since the chart is up. And I'll take suggestions as well if there's something that you want to look at. Andres, you're asking about what does 30 minutes mean on the technical analysis. If you're talking about the web trader, let's go back there. Let's go to the Trading Central, analyst views. You're asking what does 30 minutes mean? Here, it's a 30-minute candle chart. The chart is 30-minute candles. So each candle is 30 minutes. So we're looking at days worth of data with these candles because each candle is 30 minutes. That's what that's talking about. Good question. Okay. So we're on the gold chart here. And before we do the technical analysis, let's consider the quick overview we did of the fundamental news situation. So we understand the US dollar strengthened, pulling gold down because of talk about cutting back on the bond buying program. Okay, that effect occurred then, right? That effect occurred. The US dollar strengthened, they talked about bond buying program. So that's why gold dropped. Now, why should gold keep dropping? There's nothing new about that yet, right? The effect of talking about tapering the bond buying program caused the US dollar to strengthen already. So now the question is, what happens next? Today, there's talk about, an increase in the debt ceiling in the US. Well, what happens to the strength of a currency if you increase debt on a currency? Probably it would have a weakening effect potentially. Yeah, we could look at Bitcoin, sure. So we have to look at what do we expect fundamentally and line that up with our technical analysis. That's what makes sense with trading. So, we understand why the US dollar strengthened. We also understand why gold might have a rebound a little bit if there's a potential large stimulus package passed in the US for infrastructure stimulus. If they're going to print another $1 trillion of USD to hand out for building roads and bridges, perhaps that could have an inflationary effect and cause gold to go up. If they're going to pass a large budget, if they're going to raise the debt ceiling, all of these things seem to be something that could cause some inflation fears again. So you might be looking to say, you know what, I trust the support levels right now after all this strengthening of the USD that pulled gold down. And if that's the case, then you're looking, technically speaking, for support levels to buy from and maybe get your stop loss below those in case you're wrong. Now, if you feel the opposite, then you would be selling on gold. If you think, hey, no, USD should keep strengthening, then you'd be thinking the opposite. But let's presume that we think there's some reasons why maybe gold could go back up with renewed inflationary fears about debt ceilings being raised and $1 trillion stimulus packages, et cetera, in the US. So if we take a look at then, we're on 1 hour candles. Let's go to maybe 4 hour candles or 1 day candles. And we start to say, okay, maybe we see a support level here. And let me get rid of this feature that causes it to keep going to the end of the chart. This one right here, by the way, you see I can scroll and it stays over here now. If I activate this feature, it says scroll to the chart to the end on tick incoming. If I click that, it keeps jumping to the end, and I can't keep myself over here. So just a little tip, untick that. Then you can slide over a little and look for your price levels. And I can see right here on the 1-day candles, a bit of a support level there, okay? Support and back up. It tested it and found support at that price level and went back up again. And now it hit here as support. So, you know, could it break below 1721 and head towards 1700? Of course it could. But right now it found some support at somewhat of a support level on the 1-day candles. It's not a real clean support level, but we can see some support there. So then if we go to 1-hour candles, let me go back to this feature to get to the end. Then we say, okay, here's that bounce. Okay, it hit here and it bounced up really all night. And now it's been going sideways. Okay, so if you believe gold could strengthen, the technical analysis looks nice. I can go to the 4-hour candles or the 1-day candles. I can say, you know what, I'm going to buy on gold right now. Whatever trade size would make sense for you. And I'm going to put my stop loss below yesterday's low, last night's low, right there. I don't have to risk any more than that. Because if it breaks that low, then hey, US dollar's off and running. It's strengthening again, past the high that it strengthened to, what they said nearly a 1-year high yesterday. Okay, if it breaks that high of strength and pulls gold down further, then okay, you take your small loss. The potential for a rebound though on gold, if there are fears about inflation again in the US because of, you know, trillions in stimulus and etc., you know, $3.5 trillion budget being discussed in the US, then perhaps gold could come flying back up. And if that's the case, we start to look at, well, where's the resistance level I might want to take profit at? Could be this first resistance level right about here, okay? That's better than, what, that's about 2-to-1 potential profit to risk. And I don't even have to break above this old support level right here. Okay, we see that was support here, and these are 1-day candles. Support again. It did break it here, and when it broke it, it plunged. And when it went back above, it went flying up, right? And then it became support again, support. It broke below it, it became resistance, and down. So this price level here seems to be very important as support and resistance as the storylines change in the fundamental news. It broke above that price or below it, and it acted as support and resistance. So now we're below this price. So if gold is going to re-strengthen, it should be able to approach this price level without too much trouble if the strengthening of gold occurs, and you can take profit before even having to break that price level. Okay, so I'll cheat that down just a little bit to make sure I'm below this support level. And now I'm looking at still about 2 times potential profit to what I'm risking. And the technical analysis is on my side with a nice support level. And maybe you believe the fundamental news is on your side too. You never know what they're going to say in Washington, D.C. They're bickering back and forth. But if there's signs that, hey, it looks like they've got a budget deal and they're going to pass, you know, a large amount of budget, then you can see the US dollar weaken a bit and gold go back up. So we'll see. We'll see what happens here. It's a limited risk, higher reward setup, technically speaking. And maybe the fundamentals are on our side there. Henry, you're asking, what about buying from the last support level? Yeah, if it goes back down there, Henry, that would be ideal, right? Instead of buying now like I did, right? Maybe you're looking to buy, but you'd like to buy from a lower price. So what kind of pending order, and not just Henry, anybody, what kind of pending order could you put to buy from down here further, closer to this 1-day candle support level, closer to the bottom of this wick on the 1-day candle? If I wanted to buy from down here more, this support level, which isn't that far down, it's only about $5 or $6 down. If I wanted to buy from lower, what kind of pending order would I put to buy from a lower point? Buy stop or buy limit? Would be a buy limit. Buy limit. Buys from a lower point. Okay? It's the traditional buy low concept, buy limit. Buys from a lower point. So, and you can do both. It doesn't mean you can't do both. You buy now because you say, okay, if it rises now, I don't want to miss it. And then you can say, okay, I'll also program a pending order buy limit to buy from a better price, maybe from 17.22, if it drops to that price, right? And I can put my stop loss at 17, I don't know, 17, risk $5 per ounce. My take profit at 17.32, going after $10 profit per ounce. And there we go. So now I have a pending order as well. Okay. Now the pending order, I could say, you know what, I want a larger profit than that. You know, my take profit on my first move, and let me get rid of some of these lines I drew. Objects list, horizontal line, delete. Okay, so if my entry price on the second one is down here, maybe I want my take profit. Maybe I want my take profit up higher towards the same resistance level as the first market move. Okay, maybe I'm willing to take my profit a little sooner at this little resistance level here, but now look at the potential profit compared to risk by using the pending order, right? If I go to 1-day candles, it's the distance to my stop loss is much shorter because I'm waiting for a better price, and now my potential profit is much better. That's the difference between being patient and waiting with a pending order for maybe a better price level, or taking a market move, and one is not better than the other. The market move ensures that you got in. If it goes the right way now, the pending order doesn't do you any good if it doesn't reach your preferred price, right? But the pending order in this case would be better if it does reach your preferred price. And we can make sure our two stop losses are, you know, at about the same spot. Okay, now I slid it down. Both stop losses are at the same spot below the 1-day candle support. One would give us a better profit to risk ratio, but the other got us in sooner. So now we have two trades, one market, one pending, both operating with stop losses below the 1-day candle support. So it's a good technical setup and potential profits before the major resistance. So we'll see what happens on those. Very nice. And thank you for the suggestion about using a pending order from closer to the support level, because sometimes that will happen and you'll get a better price. Okay, what about crude oil? And I know someone mentioned Bitcoin. We'll look at it in a moment. You know, 1-day candles, we see resistance up here. Okay, a while back, weeks back, months back, oil reached 77 almost per barrel and then came down. Then just a few days ago, we reached almost 77 again, and down it came from that resistance. According to Goldman Sachs, they think oil could reach 90 a barrel. So if you're going with their view, you might say, okay, I'm confident it can reach 77 again. This resistance here, if indeed you believe it can reach 90, if we look at the technical analysis, we say, okay, oil's kind of snaking along sideways. It certainly isn't plunging. It isn't running up either. So you have to decide maybe fundamentally along with the technicals, what do I think is going to happen here? Well, certainly if the U.S. passes an infrastructure deal, passes a large budget, raises their debt ceiling, all of those will create bullishness potentially on oil. More money, more spending, more oil demand, right? So any stimulus measures that are passed, budget deals that are struck, could create bullishness on oil. What's hurting oil maybe is some of the problems in China. So we've got some opposing storylines that are creating more of a sideways movement on oil right now. The determining factor could be if the US dollar weakens again, then oil could more easily go up. right? Inflationary movement. If the US dollar weakens, then commodity prices go up easier. So with that in mind, then you could say, all right, I like this support level here as a pretty major support level, because on the 1 hour candles, we see resistance, resistance, resistance. And then once it broke above, it became support and went up further. And then once it plunged down, that acted as support once again right here. So the old resistance acted as support when it first broke above that price level, and then it confirmed the support not that long ago when it tested that price level again and went up. So if you're buying on oil now, let's take a move here on oil. And again, I'm not telling you should buy on oil. I'm saying if you're buying on oil, the technical analysis makes sense here, that if you put your price below this price level here, it would take some momentum to break below that price level. It's acted as support 1, 2 times, okay? And this drop in oil here was amongst some pretty strong fear that was happening about China and some other things. So it withstood that downward pressure, and that price level held. So if you believe there's reason for US dollar to weaken, for oil demand to increase, then this price level probably should hold. And so you limit your risk, because of course we could be wrong. So we put our stop loss at a spot that makes sense risk-wise and take a trade size that makes sense. And then take profit. If you're scalping, probably you say if it reaches the high that it was at just less than a week ago, I can take profit, and that's about double the potential profit compared to my risk, give or take. Okay, so going after a decent profit doesn't have to break a major resistance level, and I can make more profit than what I'm risking. Now, again, could you be more patient? Even if you want to buy on oil, could you wait for a better price with a pending order? Of course you could. So we could do the same thing we did with gold and say, okay, if it drops to 74, I'll buy again at a better price. So I could say market execution, pending order, buy limit. If the price drops, say 74 even, then stop loss maybe only need to be $1 down or 50 cents down. Let's say 73.50 as an example. You can always slide that stop loss around. Take profit up near where we put our market move. Take profit, maybe 76.25. Okay, and these prices, stop loss, take profit, they're being determined by the technical analysis. Where's the resistance level? So you're taking profit just before the resistance if you want to take a quicker profit and not depend upon the resistance being broken. So it's an easier profit to take. You see our stop losses are down here below the support level. I could slide this one down so they're both in about the same spot. Okay, so we have 2 stop losses below the support. We've got our take profits up here before the major resistance would need broken. And I can slide this one up a little, maybe this one down a little, so they're in the same spot. Okay, and so one market move, one pending order. That assures you're in on the market in the direction that you prefer. And also, if you get a better price opportunity, you can get in from a better price as well if the first move goes wrong in the beginning. All right, and there are different ways to play this. If you want to sell on oil, you can, absolutely. The technical setup looks nicer for a buy because the support level is closer than the resistance, and the fundamentals might be on your side for a rebound here on oil and maybe a weakening of the USD, but we'll see. We'll see how it goes. Sometimes I root for the first move to be wrong so I can get in with my pending orders and then have 2 trades that have a chance of being right. But if the first trades go and win, then tremendous. That's good too. Any questions at this point before we look at Bitcoin? Yeah, Henry, if natural gas storage is up, if that's what the report is, that could create potential bearishness, downward pressure on natural gas. But the same thing was true about oil yesterday. The crude oil inventories out of the U.S. were way, way, way higher than expected. It went up like 4.5 million barrels instead of down as expected. The expectation was a drop by 1.5 million or so, and it went up by 4.5 million. So, but oil still didn't crash. And so it did pull down a little, but not as much as you might expect. And largely because of what Goldman Sachs had to say about expectations of $90 a barrel. And a lot of that is tied to the fact that a lot of the economies around the world are coming out of the pandemic. And oil demand is expected to increase if that happens. Okay, so let's take a look at Bitcoin as an example for cryptos. And we see, okay, a recovery here over the last 12 hours or so, Bitcoin rushing upward, okay, on the 1 hour candles. If we go to the bigger picture, 1 day candles, we see Bitcoin topped out up here around 52,000, 53,000 just a couple weeks back or a few weeks back. And then there was a lot of downward pressure on the cryptocurrencies. Why was there so much downward pressure? Largely because of China. A different reason out of China, not because of economic problems in China, but because China decided to crack down on crypto mining. Then they decided to crack down on bank transactions with cryptocurrencies and on and on. And so basically China has made cryptocurrencies illegal in China. They don't want banks dealing with it. They don't want financial institutions dealing with it. They don't want their citizens trading on cryptocurrencies, etc. And so that put a scare into the crypto industry, but it seems like cryptos are starting to bounce back from that because after all, China's not the only place in the world that has people buying and selling and dealing with cryptocurrencies. Now, and a lot of the mining operations have already reset up shop in other locations around the world that allow it. So we see on the 1 day candles then an old resistance level here, resistance, resistance, which became kind of a gray area where it went above and below and back above this price level. And then now it acted as support. So that's a classic price level where you see first it was resistance, then it became a gray area, up and down, and then it became support. Confirmed support with 1, 2, 3, 4 contacts on the 1 day candles. Okay, so if you're just a technical trader here, you'd say, wow, if the USD, especially from the fundamental situation, you say the USD has a chance to maybe re-weaken after reaching a 1 year high in USD strength. If the USD is going to weaken, then that's inflationary for anything that's priced against the USD. And then the technicals line up. So maybe I'm looking at Bitcoin, I'm saying, okay, I'm going to take a trade. Bitcoin, usually you're trading a smaller trade size than you would on other instruments. Let's say I'm taking a 0.1. I'm buying on Bitcoin, and I'm putting my stop loss below the 1 day candles, and I'm putting my take profit at the first major resistance level right up here on the 1 day candles. So my potential profit is quite a bit more than what I'm risking. And the technical side then is on my side, risk reward, and the fundamentals maybe are on my side too here. After a lot of strengthening of the USD, could the USD give back some ground to the commodities and to the cryptocurrencies, etc.? We'll see, right? At the very least, the technical setup is on your side. Maybe you want to say, I don't want to risk that much. I'm going to slide my stop loss up a little closer to that 1 day candle support. Okay, fine. Still, nice setup technically. Now an even better risk reward as I slid my stop loss up just a little. I cheated it up. Okay, but that's up to you. How much do you want to risk? Where do you want to put the stop loss, the take profit, etc. But technically, this sets up nice with a nice established support level that's been confirmed multiple times. Again, please feel free if there are any questions, comments, you can jump in. I mentioned the Australian dollar and the fact that the Australian dollar many times can be weak. if there's problems in China. And we also saw some good headlines out of Great Britain with the GDP numbers, out of the European Union with some of the other economic data. So maybe we look at the pound or the euro against the Australian dollar. So maybe we look at euro AUD. And we say, okay, 1 hour candles. We see the euro has come down quite a bit against the Australian dollar. And you say, okay, let's go to 4 hour candles. And we see a support level right here, an old resistance level. So this was resistance, resistance, resistance. It broke above that and became support, 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 tested a little, but held as support, broke below and became resistance, broke above and became support, and support. So this seems to be an important price level, acting as support and or resistance, depending on what's happening. Okay, we understand why the euro maybe could be weak somewhat with some of the fear about the spread of the Delta variant and some other things that have been going on. But we also understand that there's been some good data, and there's reason why the Australian could give ground back if there's problems in China, right? So technically speaking, it looks nice. Fundamentally, the news could be on your side here to go for a possible rebound with the euro from the support level. So if we look at 4 hour candles, we do a market buy as an example here on euro Australian. We put our stop loss below this established support level. Okay, I'm getting just below the wicks where the support level was established. We see the resistance was just above that. It's kind of a zone of support and resistance. There's gray area in the middle, right? So you want to get your stop loss below the gray area, below the wicks of the support level. Okay, and certainly then we're below this resistance up here. Okay, resistance is higher, support's a little lower. We get below the wicks. There's our stop loss. It would have to be a swing in momentum to break through all of that support and hit our stop loss. And if that happens, okay, you're wrong. You take your loss, right? And our take profit then could be up here just before all of this resistance. And that's about 2 to 1 potential profit compared to risk. Okay, approximately 2 to 1 potential profit to risk, depending on exactly where you put your take profit and stop loss. I'm looking at about 2 to 1 profit to risk. And the technicals are on your side, and perhaps the fundamentals will swing soon to strengthen the euro here against the AUD. There's a lot of fundamental reasons why that could happen. So it's always nice to combine the technical analysis, which looks nice and has opportunistic entry points, risk management, and at the same time say, hey, the fundamentals maybe are on my side here too, right? At least they're not completely against your move. That's key, to at least know that the fundamentals are neutral for you. And if they're in your favor, then great. And that's kind of what we're attempting to do here. And we'll see how these turn out. I'll let these trades run until they come to their conclusion, and maybe we'll look at them on Tuesday next week. Tuesday evening is my next webinar. Any questions, comments before we end the webinar then? We've been going for about 45 minutes. It's probably enough. We've looked at a variety of instrument classes here. Any questions or comments? Okay, great. Thank you everybody for your attendance. It's good for the participation. Some of the comments you all had about the price levels and different things, it's really helpful to know what you're thinking. So thank you for the participation and the questions and input. And until next time, good luck with your trading. I think we'll see a lot of nice movements with the instruments we've presented here, as well as the others. All right, bye for now. You're welcome.